Hey you guys, welcome. What's going on? My name is Shaquan and I am the trading educator here at Forex Trading. And in today's video, I'm happy to announce that I am doing a series on trend. That's right, your girl is doing a series on trend for the month of October. So here's the best part about this. If you're in the Swing Trading Society, every single week we are going to be analyzing trending currency pairs, what a trend looks like, what are our market cycles, and how we can break those down. So we're going to take it step by step, piece by piece, from 3 different time frames. So if this is something that any of you here are interested in, make sure that you join the Swing Trading Society by clicking the link below in the description. So let's go ahead and let's get to the first video of the series. So first thing first, we have to establish and identify what the heck is trend. And you guys, trend means nothing more than prices either going up or down for a given period of time. Now, you may be asking, well, why is this important? I want you to think about seasons or think about a trending fashion. Well, things go in season, out of season, in trend, out of trend, in style, out of style all the time. And what this does is it creates cycles. So as these cycles are being created, what's happening is we're learning how to fall in line with what's trending and what's not trending. Think about it this way. Like, let's use something in real time. I want you guys to think about the Real Housewives of Atlanta, right? So every single season, what do? They bring on old cast members, new cast members to see how they clash, to see how they get along, and to help build storylines, right? So that's the same thing. And if you notice, there are some people they don't bring back. Why? Because these people fall out of season. They're no longer popular and they have to stay with the current trends and what's going on. Who likes who more? Who do they like seeing more? Who brings the most drama, right? Or who has the best storyline? It's whatever can help get ratings. Now, on the flip side, I'm saying that to say what's popular, what's not popular, who's paying attention, who has control of the viewer's view, right? Who brings in the best ratings? We do that here in trading. This is called supply and demand, you guys. When you're looking at things from an economical standpoint, who's bringing us the most value, right? Or who has the best value at the time. So that's what supply and demand is, but that's also what trend is. So let's talk about it in a deeper fashion. Demand. What is demand? Demand means that someone wants something. That's what demand is, right? Supply means that someone has to give what the person who wants the thing, what they desire, right? So let's say, for example, on my price chart, you guys are looking at pound USD, right? You see pound USD. I am on the daily time frame. You can tell because it says 1D or the D is highlighted up here. So basically, as I'm looking at this time frame, what this means is I have to spot the trend. Who has control? And this is literally how I spot it. What I like to do to know if I'm in an uptrend or a downtrend, besides using a tool, what I like to do is get my mouse and I hover over price. And as you guys can see, price is going down with this area that I just hovered over. This lets me know that price is in a downtrend. So what this means is if I take that currency pair, right, pound USD, which basically stands for the Great Britain pound versus the United States dollar. If I break these two currency pairs up, if I just look at the Great Britain pound on one side, and then if I look at the United States dollar on the other side, what you have to know and understand is these are 2 different economies. Like, stuff is happening differently in their economies. They may share some of the same characteristics, like, for example, the COVID virus is happening right now, and it's happening in both of these places. But which one is more effective, right? How is Great Britain pound's government better or not better than the United States dollar or the United States government, right? So these are things you have to look at. Are more people buying in the Great Britain or the UK economy, or are more people buying or selling, and I'm talking about retails and consumer goods and services, are more people buying in the United States? Is the UK or Great Britain, are they building more in their economy? Has the building slowed down, especially with people not being able to go out as much? Has it slowed down in the United States? Like, I'm pretty sure you guys are getting the gist, and this goes into fundamentals, right? That's a whole different training too. So this goes into fundamentals, but basically whose economy is doing better. So you have to separate them, right? Here's why I'm saying that this is how you learn to establish an uptrend from a downtrend. As you guys seen when I was hovering my mouse over, what you guys will notice is price is going down. And when price is going down, it's made of a series of highs and lows, right? This is how you get retracements in the market. So if the market is going down, it has to go up. That's the retracement. The market goes down, it has to go up. That's the retracement. The market goes down, it has to go up. But what this means is overall, since it's sloping to the downside, now we get into math, it's sloping to the downside. Remember the slopes? I used to hate the slopes, right? What was the equation? Y equals mx plus b or something, I don't know, something like that. I used to hate it, but it gave you a slope. So as price is going down, once again, break up that currency pair. Pound is first. That's the base currency, which basically means because price is going down, you will be wanting to sell the pound, because if it's in a downtrend, it means pound is going down while the United States dollar is going up. So if you sell this currency pair, you're basically buying the United States dollar over the pound because it's decreasing, right? This is if you're the seller as price is going down. So this is what a downtrend means. It means that the pound is not more stable, or its value is declining over the United States dollar. Now, let's get into the uptrend. So if now I just hover my mouse going up, if you see how it's going up, 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 now what this means is price is in an uptrend. So let's separate the currencies once again. We have the pound over here, we have the dollar over here. And because price is going up, what this means is because pound is the base, it means that now that pound is going up, the dollar is going down. So what you want to do is you want to be the buyer over the dollar. So once again, let's get back into supply and demand. As long as price was going down, there was no demand for the pound. So because there's no demand for the pound, it means that there's not a lot of buyers in the market. This is where the sellers come in at. So if I'm supplying something and I see that people aren't buying it, I have to sell my inventory and I have to sell it at a cheap price. Now you guys are going to see my price scale over here, right? So as you'll notice, as price goes down, it starts to drop in increments. $1.32, $1.31. $1.30, $1.29, $1.28. And these are the prices that you will be selling your pound for, but you'll be buying the dollar inversely. So banks use this information whenever they're exchanging currency across the counter. We also use these numbers for imports and exporting goods. This is where they get these numbers from, you guys. So also too, if you see when price was pushing up, this means that now you're becoming a buyer because now there's a demand for the pound over the dollar. So there's something we want, which would be the pound. There's something that we don't want, which would be the dollar in this situation. So now because there's a demand, price is going to start going up. So this is literally how we get to know and see if price is in an uptrend or a downtrend. Now also keep in mind, you guys, the higher in time frames you go, the less fluctuations you're going to see, such as this movement here. We have fluctuations, but there aren't that many. Keep in mind, the lower in time frames you go, you will be seeing more fluctuations. And let me bust a myth right here. We're also told, or if you've been trading for some time, you've been told that price does things different on lower time frames than higher time frames, and that's simply not true. If price is going down on this time frame, let's say in this area price is going down, well, guess what? On every single time frame below this time frame, price should be going down. And then the moment that it pushes up, remember, these are the retracements when price pushes up against the trend. And we'll get into that in future videos. But if price was pushing up, the lower time frames should be pushing up too. And then when it starts to push down on this higher time frame, price should push down again on lower time frames. Because remember, every single candle that prints on the daily time frame takes 24 hours to print. And so if it takes 24 hours to print these candles, that means that the candles on a lower time frame are printing these candles. So think about it that way. You're just seeing a fraction of every picture every time you drop down in time frames, okay? So this is the beginning of the series, how to identify uptrends and downtrends and what they mean. So I hope you guys liked the video, and if you did, give it a thumbs up. Make sure you follow and make sure you share the video. Don't forget also too, if you want to join in on our classes every single week this week in the Swing Trading Society, make sure you go to the link in my description to join the Swing Trading Society. It's a trading group that is $49.99 a month, where I teach you how to hold trades and have 15-minute trading days. So I'll see you guys on the inside.